G'day YouTube investors, welcome back to Pete's Investing Updates, and we discussed some share market world indexes and gold. Using a 15-minute price chart, we review the weekly progress of the ASX 200, the US market, Germany, the Ftse, China market, and gold. We show any opening and close positions, any drawdown requirements, but firstly, we're not recommending you trade any of these positions or instruments. Rather, this is purely an educational guide to some trading ideas. Also, very importantly, don't forget to subscribe and click on the notification button to receive any updates. And for same-day updates, refer to our Patreon channel in the link below if you're not already a member. So let's get stuck right into it. So as you can see here, this is a summary of the indexes for the rolling 5 months so far. And profitability, with a couple of losses at the moment, based on our last week or two, which the market's declined, making a slight correction, the drawdown requirements, and how that calculates out to a monthly profitability. We'll talk about each of these as we progress. So first off, let's look at the ASX 200. So in the long-term view, you can see there, since we entered the trade back here about 3 weeks ago, the market's been declining in a slight correction, coming back to this potential support line. So again, since we entered the market back here, middle of February, in the last 2.5 weeks, the market's been declining, but we're still holding on to our 5 positions from our open entry. We haven't doubled up yet. Now you might say, well, hang on, we're losing out on some income because our money's tied up. Well, not necessarily, because don't forget the strategy here is to accumulate and sell at a profit, and with no stop losses put in place, because we don't believe in stop losses. Now, so what are we receiving? And we always go long, we don't go short, because when we go long, we're holding the positions of these indexes, the ASX 200 and the US market. And just give you a summary of what that looks like. In the last week alone, we received dividends from the ASX 200 of $256 Aussie, and about $17 US for the US market in Aussie dollars as well. In the last 2 weeks, since we've been holding on to those trades, that's equated to about $147. Sorry, that was the 2 weeks there. That was the 2 weeks, 21st. It was 273. The last week we've made $147. So we've received some sort of minor interest, if you want to call it that, on our holdings. So it's not a complete loss. So going back to the ASX 200, it's made a slight recovery overnight, last few hours of trading on Friday. So it's built up our profitability back to a more, I suppose, realistic level. So we haven't gone into a positive yet, but so we'll keep holding on to that, and we may or may not enter another position soon. So that's the ASX 200. Next, we'll look at the US market. And let's look at our summary here first. Again, we're trading at $19 margins per contract, and we're trading 5 contracts. Our profitability for the 5 months is $3,700 Aussie, and our drawdown is just under $2,600 with a monthly profitability of $750. What the chart looks like, again, looking at the long term, again, it's a correction since we entered back here in a downward trend. But again, similar to the ASX 200, if you're holding that in the long position, we have received some interest, albeit a few dollars. It's last week's $7 of interest, or dividends paid, I should say. Works out at about $17 for the US market of dividends paid. So again, it's made a slight correction. Now it's come up a bit. Again, not in a positive territory, but we'll keep hanging on to it and follow our strategy with no stops put in place. Again, we don't believe in stops because they're very subjective. Depending on your trading strategy, you got to decide where you want to put the stops, and how many times we've been stopped out in markets which have just kissed the stop, and you've exited the trade, and then it's recovered and gone back into positive territory had you held on. Our strategy is not to use stops, it's to double up and average down. Next, we look at Germany. So again, the German market has made 12,000 Aussie dollars, but again, the margin is $70 per contract, with a drawdown of 16,800 Aussie dollars. Now that's showing a monthly income of 24.79, and how that looks in the long term for the German market. Not as dramatic as the ASX and the US market. So as you can see there, the last 2 or 3 weeks has been fairly flat, and we're still holding on to those 5 positions where we entered back here. So it's a pretty long-term hold on the German market, the DAX. We drew a trend line here, as you can see here. When we drew a trend line back here, it broke through there a couple of times last week. And the previous week, it sort of maintained that. We drew this trend line last week. Remember, it broke down. And here, it's actually come back to that trend line a few times. Now, we don't trade the trend line. We're just using it simply as an indicator of how the market may be trending, and hopefully continues this uptrend and goes in a positive territory in the not too distant future. But if it goes against us, we'll be entering in doubled up trades of 5 more contracts for the German DAX. Next, we look at the Ftse. Very similar to the German DAX, a very sideways market move since we entered. And a 5-month rolling for the Ftse is 81.64 with a drawdown of 63.50, and works out as a monthly average of about 1,600. So as you can see there, in the last week, it hasn't performed too badly. It's gone in a fairly slightly positive area compared to the previous 2 weeks. So we hope to see this trend keep rolling up. And again, you can see the trend line we drew last week. It's kissed that trend line a few times. Next, we look at the China market. Now, this is a bit different to the other markets we've observed so far. So you can see here the long-term view where we ended up at the peak up here. This explains and better explains our average down strategy. So since we entered, we've doubled up the position here. So we entered 5 contracts there, entered another 5 there. That's 10 contracts, another 5 there. So during our last week, we've entered so we've got a total of here 20 contracts. Now, as you can see here, it's fallen off in terms of profitability, below our baseline of 100,000. So we're down on the China market trading, but that's part of our strategy. And you can see here, the profitability is in the negative, but you can also see the margins per contract is 360 compared to the other contracts that are traded. Always keep an eye on those margins, making sure that they're not changed by your broker, which could put you in a deeper commitment to funding these trades. So always keep an eye out for those. So again, we're not panicking on these. It's down $4,500 from our baseline of 100,000. But we'll keep an eye on that, and that will recover at some point. And lastly, gold. Again, a very small cost per contract in terms of margin. We're down $742 from our baseline. So if you look at gold, this is a fairly long-term trade on gold. And again, this doesn't pay dividends. We prefer not to trade it, but if you are trading it, this is what you look out for. The market's declined. It enters multiple trades here, doubles up, and currently we've got 25 positions open from our starting position of 5. But it's continuing in the downtrend. But again, because it's a slow margin trade, we're not panicking. Let's let it run. So you've got to be careful of these large margin requirements that you can afford to fund your account should the market go against you, as in this case. But again, we're not panicking with China. Our 5-month or monthly profitability is keeping us in a nice, keeping us in the black, and we've got enough funds in the account to manage that based on 5 contracts for each of these trades. So that's where we are at the moment with those indexes and gold. So feel free to write any comments if you've got any questions on how to trade. Again, for added explanation of these, please refer to the supporting videos in the links below, which helps explain our simple trading strategy and the average down process and the money management concepts. We'll get rid of some of these messages. And also don't forget to subscribe and click on the notification button to receive any updates. Thank you, and see you in next week's video.